Greetings, market rebels. Welcome to this week's macro measure. It is actually July 1st, somewhere near 5:15 p.m. on the East Coast. So getting this done, but we officially put these out typically on Sunday, hence the date on the slide. Let's get into our disclaimers. As always, I'm Wayne, my partner Ryan. We'll be working on the market outlook overview for this upcoming week. And of course, this is being done differently because proving that I have no life, I'll be working on videos today and other things, research videos. And then tomorrow we have a lot of work to do because we've got that shortened holiday day, I believe, on Monday. And then we've got the holiday itself on Tuesday. So happy Independence Day to everyone. Intellectual property rights notice. And then here's this week's agenda, which I'm going to leave up there. This is what we plan to discuss. I don't think I'm going to hit on every single line. Some of them remain the same. Others are updated. Others are entirely new. But I'm going to leave this up there in case anyone wants to grab a screenshot that you can refer to things, because I will try to move from top down through this and with comments and just quick review. But it was a very, very interesting week. But it was also, I guess, tough to predict at the start. And when I finally settled on a most likely scenario, that one played out again. It's kind of interesting how we kind of see this same scenario end the week overbought and then find a way to back off nicely and then get it geared up again midweek to late week and then jam. They've been doing a ton of that this year, and of late it's really been the case. And that really happened again. So I'll show you that because I had a hard time coming up with it, thought it could be the case, and then decided it probably will be based on all the different factors that we covered in last week's videos, which I'll show you how I wrote it up. But right now I'm going to briefly pause and then reshuffle things so we can get into things. So just bear with me momentarily. We're going to stop the share. We're going to move a few things around so we can cover things in an organized fashion, which is never easy for me to do. And then we're going to, let's see where we are here, get this showing, and then we should be able to go to screen 4. And we should be good. And screen 4 is right there. So yes, that is covering that. So this was the Rebel Pit Pro newsletter that went out. And it was a little bit harder this week. AMD was a phenomenal name, I think, the week before. It was a little bit harder this week. And unfortunately, I think a couple of technical resistance areas got in our way. And of course, we had a bad news development, but hopefully folks did pretty well in the semis on day one and maybe still were able to get another trade or two in them. That's not the reason I'm coming here, though. The reason I'm coming here for this is because of the write-up that we had in place. And let me see if I can just kind of cut to the chase. So this is part of the summary. And of course, that's why I'm doing the work that I do and putting it into the videos on the weekend. And then a lot of that, of course, naturally makes it into all that sort of assessment time and reading and things like that, discussions with Ryan, that makes it into the newsletter write-ups naturally. And so here was, we kind of talked about all the sweet spot stuff we've been talking about, which we'll cover. All the different things that we've been talking about in terms of end of June being typically pretty good. July's been good in terms of third presidential year, pre-election year, the end of first half, end of Q2 markups, that whole routine, the end of June itself being good. And then you had kind of that American holiday factor, all those things. But then I concluded with the scenario here, which I'll highlight in blue, which is just so a scenario that may play out is one in which last week's messiness lingers early in the week, and then the gang attempts to hold, reverse, and jam higher into the pre-holiday weekend. We shall see. So that was really the best one I could come up with, I think, all things considered in the end, and that's what we went with. We also did note that some of these mega caps had held up well, which we covered in our videos last week, that they may be worth keeping an eye on. And there was some news that kind of shuffled that deck a little bit on us. But overall, I think Apple, we had UOA in Apple. We had a bullish idea in Apple. So we had that idea for people in UOA to take advantage of. We had mentioned it here. We had some I think we had some good movers there in FDX and AI. I think Etsy was a little bit of a disappointment, had some nice factors in place, but that's why we put 4 names in. That's why we include bonus names to go along with the focus name, because you just don't know what can happen. And this was a great example of that, because SMH was sort of, I think, undermined a little bit by news, and it did recover, and that was fine, but it was just a little unfortunate because I think it would have had a better week. I think Tuesday was great. I think people probably did well, but you really had to, I think the smart way to trade that was take what you could get Tuesday, see how things develop on the next day. And, if you held on after the gap lower, you were probably still okay if you had rolled initially. But that 3% pop, I think, on Tuesday was the good part of it. And then they did work it up towards week's end, but the path it took was a tough part. But so I just wanted to cover that the most kind of likely scenario played out again, and that's why we try to bring all these things together. And you just never know for sure, but that's where you're kind of saying the odds are odds are likely to be backing that most likely or most favorable scenario. So that played out. We did sort of finish overbought again as I cover the points. We finished overbought again. Let me get out of this. I don't want this one. I want another browser, which I think was maybe down here. Is this the right one? Nope, that's not the right one. Sorry about that. I don't know where I left off there. I thought I had that all under control. Why is that not? Maybe it's here. No, this is so strange. And maybe it's there. No, not the holiday hours. This is just bothersome that this is happening to me again. I'm sorry about that. I've got to get us to the right browser so we can cover things properly. I don't think it's under new tab. I'm wondering if something, is it? Okay, this is somehow, no, that's not even it. I don't believe it. I really don't believe it that I'm having this problem again. So it's not up here. Is it Google, Twitter? Okay, I'm just gonna have to march my way through. That's not it. Boy, this is frustrating. That one is it. So that turns out to be it. I'm not sure how it moved. It was one of my lower browsers, and then it became sort of mixed towards the middle to the start. Regardless, we'll forget about all that. So what I'm going to go back to is the PowerPoint. We'll cover things, but they did end the week overbought. There's just no doubt about it. Maybe a good idea would just be to put this on 2 screens for now and then show that. But just to kind of show you on SPY, or should say really just discuss it, the 4-hour ended at 70, right, on RSI. So daily's on 68. So yeah, you're getting there. Going back to that browser, which is over here, leaving it off screen a little bit, but so I can pull it up more easily. But going back to that, right, this is where we ended up, just to kind of frame things for the week. So here we are again, and we noted that last week that they had backed things off enough that if they wanted to try to go for another run, given the end of the first half, they could, because it had probably backed off enough to do it. Now it's getting up there again. If we look at this view, you're not quite at that top that we saw a couple weeks ago, but you are within shouting distance of that. So you're getting up there again. So we have to be respectful of that, right? But that's where we are starting this upcoming week. Now, one thing we have been checking out is the percent of stocks above certain moving averages, simple moving averages. And you can see that this was a comeback, but they really didn't march things back as strongly, right, as they had on that push prior into mid-month. If we look at it with respect to the 50 SMA, it's the 50-day average, again, not as strong as it was, but they did march it back. So was it a good week in that sense? I would say it was. Was it overwhelmingly strong? Not really, right? But let's give them the credit they deserve on the bull side, that they did start to pick this back up and start marching it back up again. So overall, right, if you're a bull, maybe it's not a blue ribbon special where you really knocked it out of the park, but you'll take more issues moving up and improving technically rather than falling and diverging. So let's give them that. Now, just again, some of these are points that we're covering quickly in the browser that are on this week's stream on that slide that I held on there for a while, right? So everyone could maybe take a snapshot of that. But just keep this in mind, right? Because at the end, at the end of our tabs, we'll take a look at this one. Here's nearly 87% that you're up, right? And this is at this point, it's going to be about 4 weeks, roughly speaking, right? Now, by the end of the year, it's that the chances are that you're up at 50% up by at least another 25 basis points. And then there's a 35-ish% chance, right, that you're up more than that. So this to me is ultimately why this is something that I'm not so sure I can still believe that we're in this new bull market phase with rates here. I still can't fathom myself, again, without really having the proof in front of me, how this kind of dramatic rate increase is going to effectively allow things to function at a really high clip relative to where they were. Remember when rates were really low, things weren't even at that point still going super well in terms of GDP. So how the GDP continues to march along when rates go up as dramatically as they have and are set to go up even further, especially with inflation hurting the consumer. I just don't know how it all adds up to this. This is the beginning of the sustained bull market. But again, I still would love to be wrong about that. We already talked about where fear and greed is. It's a good reminder just to hit on the seasonality of the VIX, right? This is not completely updated. We had this last week, but just so everyone knows, we've been talking about this in the Phoenix portfolio. I've been telling folks, if you are in some services, you may want to check out the Phoenix even just for a month or two, even if you don't plan to hold it and trade a lot of those double diagonals, some of the other diagonals, different strategies that Ryan's been employing in there. It's worth it at times like this to learn about how to position yourself. And then when things are really the other way, where the market is getting super risky, that's when it also pays to be in there so that you know how to hedge your portfolio. But this flipped around about a month ago finally, and so we weren't able to use the kind of pessimism that was out there to really help the market at that point. Things have really flipped around, and we noted that, right? That we said that, look, this is actually a positive, and sentiment often changes with price, which it has. And now we're in the 4th week in a row where we're above average for optimism. So it's it's significantly above the average too, I would say. Okay, so you've got that. And then here's just these are all reminders, right, for folks that maybe haven't gotten this locked into their memory, seared into their memory, or you're new and you're watching some of our weekend videos for the first time. We've been using this as maybe an analog for the year. And it's at times it veered away and looked like it might not be the case. But I think overall, I have to give it credit that the market has tracked this fairly well. So this is the 3rd year of the presidential election cycle. And here we are in the midst of this year at this point, entering the second half. And you can see that this is really you have this really good performance. And then you kind of have some, after I think the earnings are out, right? And you kind of get all that priced in, all that wonderful stuff that they're going to try to price into the second quarter earnings results and reactions. Then you kind of get this lull, and then you kind of finish the year strongly. And it looks more like this up close when you drill down, right? So we should see continued solid performance into July. Maybe, right, they mark things up so much at that point that there is profit taking. In other words, it becomes sell-on news because there's good results, but they got fully priced in well beforehand. We dawdle around, and then again at the end of the year, these guys are great at giving themselves ending their year at the high water mark. So this is the pre-election year that we're in green. Okay, and then here is the sweet spot we've been talking about, which is another sort of similar but different way of looking at it. And that sweet spot, sort of like it's in its twilight, right? There's several weeks to go on this, so there could be more and more and more before we kind of hit this I wouldn't call this chop, because if you tell me that we're going to get this for the rest of the year, I would welcome that very, very much so, because a nice drop, a nice pop back up, a nice drop, and then a nice pop back up, then a hesitation and breakout. I would take that every time. That to me is nice trading right there, that you can trade, in both directions if you're open to that, and then ultimately still have a long bias. I'll be happy to work with that. But here's really the wet blanket on all this, and it's not the immediate wet blanket, but just wanted to show that here's the, let me see if I get this. Here's the so-called diffusion index, where you've got the all these different yield curve inversions that are tracked. And you can see that we recently, and we're currently right near most of the different relationships along the yield curve are inverted, right? Where you've got the rates out of sync with how they typically trade, how they're typically priced. And this often happens right in front of, you can see the gray areas, this often happens in front of recessions, which are marked by the vertical gray areas here. And the only reason why probably this area, this COVID situation it looks like a brief recession, which I guess we were technically in. And the reason for that is probably because they slapped 7 to 11 trillion, depending on whose estimate you look at, into the economy, or affected the economy to that extent. So what you say about that, I don't know, but that's extraordinary given the economy is about what, 20-ish trillion dollars. So just a remarkable amount of money just jammed into the economy. And of course, that really probably prevented a longer term recession, right? Something that had a longer duration to it. But that's really what I wanted to cover on the tabs. Let's cover the charts. And so there were some interesting developments where here's the situation where you'll see on this week's stream bullet points. If you take a look at this right here in SPY, we technically made a higher high, but you'll notice that the RSI, which is overbought at this point, or approaching at the very least, depending on when your calculation is, looks like it's just under 70. So it's right there. But you can see that it's far lower than this reading on this jam that they had right before, prior to the pullback, and then the run that we just saw again this week. So this definitely sets up for double top potential. It definitely sets up for negative divergence. Maybe people start to see this and sell. You've got the gap here on top of it all. Remember, there was all kinds of index rebalancing. There's all kinds of stuff that was going on here. So I think sorting this out with high confidence is just something that, you'll need a big firm to do for you that has everything at their disposal. I really can't explain to what magnitude, right, rebalancing or this, that, or the other factor had in creating this high. But we just have to note that, right? Because I don't think that double tops, in my experience, I think they're a very common and yet still pretty solid pattern to keep your eye on. And I also think negative divergence, with something like an RSI is also something worth keeping your eye on. Having said that, if we just use basic technical analysis, drawing trend lines and support and resistance lines, you can see that this thing has acted well, right? Where has a pop, drops back down, forms a bottom, and then goes. And that's what we had. I mean, if you told me you're going to be stuck trading this kind of action, from here on out for years and years and years and years, I would take that every time, because there's nothing better than a very clear trend that has a nice pullback that you become involved with again when you start to see signs that corrective activities run its course. And then you can expect there's probably going to be another run that follows, right? That's, I think, as easy as trading gets, trend trading gets. So that would be wonderful. I'm not so sure that's going to be the case, but we have to be respectful of the fact that, yes, things look good. Yes, they're probably going to try to make the most out of the fact that companies were likely able to continue to gouge the consumer, pass on inflation to the consumer, and that would maybe show up in their bottom lines, and then everyone's celebrating on Wall Street. But as many of us know, there's not a lot of celebrating on Main Street in many cases because life has gotten even harder for a lot of people because of these prices. It may run its course over the next few quarters where they're still able to do that, but at some point people will reach their breaking point and they just won't be able to continue to absorb this inflation that our overlords have really created, right? And I don't think it's a coincidence that they created that, but that's a whole nother story. But if you just go back to technical analysis basics, right? If you take this high out, you got to think, well, this thing could run towards the upside of where this resistance line is, just in a very basic way. So I am not ruling out more upside, right? I think that would be the end of the sleeper scenario if it happened right away. Now, the sleeper scenario is that we barely exceed 432-ish, 431 and change, 432. We have this pop above there. It gets a lot of people excited. They start talking wonderfully as a lot of people recently have. A lot of people capitulate. A lot of people begrudgingly join the buying spree. A lot of people enthusiastically join the buying spree, and so on. Effectively, that pulls a lot of people in, and then there's a rug pull, right? And then we see what happens from there. But this is the moment, right, that the sleeper scenario has been waiting for. You get something like this, and now you have a double top. Now you have RSI divergence. Can you finally see gravity kick in? And instead of continuing with the rally, we finally start to see something more substantial where the short-term trend support is broken in the form of this support line broken, which would be the 20 SMA effectively, which happens a lot, by the way. That light blue 20 SMA, and then you pull back here right to the 50. And if you did that, that would looks like it could be a gap fill, 423.95. Yeah, so it's a very kind of like hidden gap fill right there. There's a very small gap, something that's inconsequential visually, but could matter, right, if we go into that more of a pullback corrective phase. So that would be a nice 4 to 5% pullback. The thing is, right, why would that happen? What would be the driver behind that? Would it be that people want to square up in front of earnings? I guess it could happen. I'm wondering now with the sleeper scenario that we've been waiting on for so many months, having potentially developed and having its chance, I'm wondering if that's a possibility, but I'm also wondering if it makes sense at this point to think that way, because I'm just getting the sense that what they've done with earnings estimates and where the consensus has been moved to, that it's going to be easy for these companies to beat. Could be wrong. Unfortunately, I don't have enough spare time to figure out what's likely to happen. That's where, I wish I had the access that Wall Street has to be able to convey that and trade accordingly, but it is what it is. So I don't, I'm busy working on other things all day long, but this gap concerning, right? I think where we left off, again, I'd kind of say that it makes more sense to me to kind of stick with the pattern we've seen, where you maybe have a little bit of early week messiness. And then after that, the market starts getting its act together as they start anticipating better horizons, right? Greener pastures in terms of some of these companies reporting. And remember, I say it most of the time, but if we had real earnings estimates, then we'd be pretty close quarter after quarter to 50% beats and 50% misses. And instead, the ratio is more like 75% beats over the course of time, 25% misses, something like that. So it just shows you how Wall Street skews things to, every company gets the participation trophy effectively. But I hate to diverge this way, but we have to. Right now, right, it's unquestionably Apple's the biggest dog out there. And like I said, we were fortunate that we saw UOA, and I sit there waiting to trade UOA, and it's sometimes I have to wait, for the paper to show up. I can't just, it's a UOA based service, right? So it's not just me throwing in technical ideas that I like. That's something else that we use those in other places, but the most active service is UOA Pro. and I need to see UOA before I can act in there. Otherwise, right, we're looking at mainly the timing. Someone appeared to do something, whether it's legit or a hedge, but they're doing it now. Hopefully they're doing it in the nearer term in a big way. And then that gives you that sort of potential catalyst. So we had this, and it was a nice breakout name, and even closed more strongly than I realized. I hadn't realized it traded up to 194.98, because I think that's well into our target levels. But you could see that, yes, I think this did finish, right, certainly well into overbought territory. I think it's getting concerning here, but I also would not rule out the fact that it still has more room. And round numbers are, these big round numbers are a big deal. And of course, with this being such a heavyweight, the fact that it's working well and it still has more room potentially if it wants to, again, probably something that could benefit from a short and shallow pullback, and then re-energize right into maybe earnings and maybe benefit from earnings. Who knows? I'm more about the pre-EPS run than I am the EPS reaction, and that's not even close. So it's like 99 versus 1. But in terms of my favorite, how I would favor trading something, but this doesn't look right. This doesn't look awful, right? Making a new all-time high is not indicative, right? Something that's indicative of a stock that looks awful. And so that does not look awful. Microsoft, obviously, another big dog. We had this one as well. I think the idea is still, I think I put it in for at least another week or so. It wasn't just on the 30th of June, but that is close to, right? If that's close to re-energizing, if the market stays strong. We had Meta, we talked about, where another one that we thought looked like it, like bottom line is like that discussion of, yes, some of these mega caps have a rough finish in a year where they start out as strongly as they have. That's been the case over the last 10. Well, it really didn't materialize, right? They kind of either moved things up or held things nicely. Probably Google would be the one where it just never got its act together. So if you're looking at some of the mega caps and you can say, well, it kind of happened in Google, I would say, yeah, that's true. But some of these other ones, it certainly did not happen in, right? I mean, it's pretty hard to argue that Apple had a rough stretch there, right, where it's powered up to a new high. Tesla managed to get back close to the highs. So a lot of the really, really big names just hung in there very, very well. Amazon, we can take a look at too. And this one to me was a little frustrating. I thought this was going to break out and go a little bit further, but it didn't. Maybe that's still in the cards. We'll have to wait and see. But I overall, when I look at all the things I do, and a lot of these are off screen, but until we start to see some signs of faltering in more of these names, it's going to be hard for the market to go down. That's just that's just due to the weighting. So we need to see some faltering there. And if we do, then maybe you could start talking about a nice little retracement, a pullback. You could take some reversal trades from, but the market's in extreme greed, but not all these stocks are extremely overbought. Are they close to overbought, or are they overbought in some ways here and there? Yeah, but I don't think it's as bad as we've seen it before. Put it this way, it's not Nvidia overbought the way that was overbought. Like, what was it, 2 weeks ago? Sorry. That became very, very, very overbought at that point, with like, I think I had like 87, 89 on the weekly RSI. Can't remember, but it was up there. It was really up there. It's still really up there today on other time frames. So that's not something you see that often. But bottom line is, that looks like it could go again, right? That looks like it could try to pop and go at this very moment in time, right? Trying to get back above all the SMAs and maybe pop up back towards the highs. And there is room there that if you start to extrapolate trend lines, like that really could go make a new high and find its way higher. So I can't rule that out. It did come off. If you notice how much it backed off down here with some of these indicators, you could see that they are not anywhere near where they were. So they are on the other side of mainly the zero line or what have you. Doesn't really matter what they are. It's just a general profile that these things look like they've corrected, and they're more primed to want to try to lift than they are to fall at the moment. Now, of course, you come in Monday morning, news can change everything. And then this 20 breaks, and then you're on your way back towards the 50 and maybe ultimately filling this gap for one, and you go from there. But as of right now, right, if we look at it objectively, all the SMAs are upsloping pretty much, and the shorter ones are even stacked above all the longs, and it's just stacked and sloped. It's the profile you want to see as a bull, and you want to see it maintained, and it often does maintain itself. I mean, look how long this thing's basically stayed stacked and sloped for the most part, right? So that's what happens when you get very strong uptrends like NVIDIA's been in. So when we look at all those names, it's hard to really hate this stuff. Going back to the spies, we know it's short-term overbought. This is the one I'll start with as a reminder. And there is negative divergence. So you've got the gap. Be careful, right? The short-term could be a little rough. Then you have to see how it acts, right? Does it hold the 20 for sure? If it holds the 20 and starts coming back up, and let's assume it comes down to the support line and holds, I would expect it to try to continue to run into mid-month, because let's face it, the sweet spot, the pre-EPS runs, the sweet spot twilight that ends strongly, all that kind of stuff, and the market's current mood, right, where things just are being bought up regardless. So you add it all together, and I think you have to favor that as the, let's call it, intermediate term. But for now, I think we have to be careful that this got a little ahead of itself with some dicey technicals at the moment. But let's also be fair about this. I think the diamonds are similar, right? Where if I look at the diamonds chart in the short run, it's got sort of a maybe sort of slightly lower high or potential double topish, potential negative divergence here. So we have to note that if it does start to go down, you can't be surprised it also has the gap. But to be fair, right, if we step back a little bit on this thing has an inverted head and shoulders pattern in it. You could pretty much see that, right? It might be compound in some people's eyes, but that's fine. But if you look at this as your incoming trend, you have this inverted head and shoulders as your corrective action, and this thing starts to go, right? You could break out here and you could challenge these highs. This thing could really go, right? So I don't think you can rule that out. Now, remember, we had this discussion this week, patterns that fail to fire. So if this can't fire sort of through the neckline, let's just put that, let's say it gets there and it can't fire. Let's just call it 346 in the diamonds, something like that. It doesn't really matter. You're going to have a really hard time saying this is the exact penny, and then having extreme confidence, because you can still have false, you can still have legit breakout. But if that were to kind of come to here and then this doesn't fire, the other way can happen. So failed patterns are just as good as patterns that fulfill their destiny, right? Because if you're willing to trade them that way. But that to me is on the cusp of going. The problem it has, I think, at the moment is very similar to the spiders technically, right? So they're both kind of due for maybe a little early week messiness, and then you see where it goes from there. You see how much damage gets done. Again, I could be dead wrong. They could just rip them on Monday, rip them on Wednesday for all I know. But I'm saying overall, most likely probably needs a little bit of a breather. It wouldn't be crazy to see a little bit of a breather. Let's take a look at the Qs, which this is the thing, right? And this has been along with the semis, right? SMH. This has been the powerhouse. This has been the workhorse that just continues to lead for the most part. It did not have the performance this week that the SPY did. But again, everything's stacked and sloped here. And all of my cyclical stuff says, no, this thing still looks really good. So I would not, this is why, right, I've tried to put some trades in for possible reversals, but the confidence level just hasn't been there as a bear for a very long time, the way that it once was back in 2022, because the trend really changed, right? And all these cyclical things have really changed on my charts. And so you got to be ready for something. You've got to, if you see big UOA, you've got to be ready, in my opinion. You don't know what news is on the way that could really shift the landscape, right? You just don't know. So you've got to be ready and primed and prepped. But at the same time, I knew a lot of these bearish ideas probably were lower probability. It was more out of discipline that we were keeping those things in the log, and of course trying to add bull companions to go along with them where we thought we saw fit. But this is a lot, right? You can see a lot of this is corrected, and it's still in an uptrend. It's held above every SMA. All the SMAs are stacked and sloped. It's hard to say that looks terrible. You know, you're clinging to the fact that maybe there's a little bit of a lower high, lower momentum readings, and then this fails to go. And that could be the case, and you could get a rollover. This could just be mainly like the first half of more corrective activity, which I would think if it cracks the 20 again in light blue, you take out this low from 626, then I'd start looking, of course, at lower flat lines, but ultimately maybe a trip back to that rising 50 there in gold, you know, and that would maybe be like something like around a 5 to 6% correction in there as well. But it would be curious timing against the third presidential year and the sweet spot that we're in, and the conclusion to the sweet spot. What would drive that, I think, would have to be a news item, right? So I think in lieu of some major news developments or shifts, maybe it's Fed speak, I don't know, but geopol, I just don't know. But I think it would take some kind of a news catalyst to make this really be the first half of some corrective activity that pulls us back even further right now, just because so many things continue to point to the upside. So that's that. So again, I don't want to leave people in that watch the videos thinking, oh, Wayne's bullish. I'm just trying to be objective and throw some thoughts at things, right? I'm not this super bull at this point, but I just have to be objective. And until we see some signs of this thing rolling over and cracking or starting to give some back, you know, why would I want to fight against this? You know, they'll steamroll the living daylights out of me, right? If I try to fight against this kind of a thing. And once again, if you just do something, let's just do it just to see, right? If we take a key high and we kind of draw that along to connect another key high, which I think is a pretty solid line right about there, just ballparking it, and you just kind of take the natural slope that you get in a market like this, right? That says that you still, if you do take out this high, there's more room up there, right? You could still go up another 3 or 4% before you even bump into resistance here. And it depends on how you want to draw these. That's why this is all eye of the beholder stuff. I'm just looking at it, right, since this correction ended here, this one right here, that, hey, this one is trending up this way. If you want, we could even extend the line back further, but you'll get arguments from people, well, you shouldn't really connect, you know, highs that one existed within corrective activity, another was made in the trending activity. I mean, people argue over everything. What I would say is, you know, if you're new to all this stuff, do a bunch of different things and then start reviewing them to see which ones work best. That's the bottom line for me anyway. So anyway, yeah, this stuff's stretched. We're not making any arguments that it's not. Definitely still think there could be a short-term pullback, but until we see more cracking of something, right? That recent low, as we discussed, or the 20-day, or both, right? We have to at least get the crack of something, and we don't have that yet. Now, and the cycles look good on all these things still. So there's nothing there. Now, this is where it gets, I think, the most interesting, and that's because this is the IWM, and this has been a big piece of the puzzle. And we noted that a while ago. This probably goes back 6 weeks, 2 months. I can't even say at this point, probably closer to 6 weeks. We said, look, they're not pulling along. The breadth on this is not all that great. There's not a lot of things participating. It is a relatively narrow rally. Everyone knows that like the big seven are responsible for the overwhelming majority of this rally's the points that have been tacked on and the percentage gains, whatever. But look, this, right, you have this situation here where you kind of have this narrowing, right, where you can kind of see you've got this kind of like very kind of stealthy triangle that's in play here. And inside of the triangle, which, you know, you're coming closer and closer to the apex, but this was the longest basing portion of the whole thing. They jammed everything. They pulled it back nicely. And this is the old push through, right? Pull back. We always talk about really almost like idealized technical analysis stuff. And you pull back to the 100, the 150, the 200, that your longer term moving averages, you find support pretty much exactly where the textbook would say you should. Then you start to rally, and now you're on the doorstep of breaking out to a new recent high and maybe challenging these prior highs. So the way that I look at this is that these people that run money have to be looking at a lot of these names as technically undervalued. And I don't mean fundamentally, I mean technically, where it's like, oh man, that hasn't ran as much. We got to get us some of that, right? That kind of mentality. And they come after things, right? When everything else has been bought up, they start coming after this. And I'm starting to see more and more UOA that's geared towards short squeeze names, rinky dink companies that really you wonder about their future, you wonder about their viability. But this is what happens kind of like in the later stages of rallies, where they start coming in for the not the cream, let's call it not the cream. So this does have a potential, right, to nice burst, pull back and go. And you would think, right, it at least comes up and starts challenging somewhere near maybe the 197 area. So we added some bullish ideas in here and SPY this week. I think it was early in the week we got that paper, and I just said, it's time to put these things in. And so we've got those in place for people to trade them. If it, and I think that the trigger was far lower, but the point is that this thing's there. Now on the short term, is it overbought? Look, there's a couple things that are concerning about it, but it had kind of a weak close on Friday, which I think kept it from being overbought. And it came back and kind of closed the gap that it left on the way up on Friday, right there. So that's why it looks the way that it does. But if there's not much more of a pullback, remember, if they pull this back small into here and they start working it back up again, it will not have to do a lot of work after a rest to push through the highs and then start attacking higher highs. So again, it's not a forecast, it's a scenario that is definitely something I'm thinking about as a possibility. So let's see what happens. But we've been critical of the bulls at times this year in terms of the fact that, look, it's not looking like a new bull market. Trade it as a bull, right? Trade what's there, but it doesn't look as wonderful as a lot of people are trying to make it out. But it's gotten better. We've got to give them credit, right? If we're going to be objective and help ourselves by being so, we have to be objective about it. And the objective view of this is that the technicals are getting better. Are they stellar? I don't think so. But the IWM did rally, right? If we look at this chart, you can see I brought some of these in. Here's the McClellan Summation Index. Here's the McClellan Oscillator. And they're both, right? They both have done better of late. I'm not going to say that anything more about them other than they've done better of late. And so are they looking horrible where they diverge terribly? No, I don't think they do right now, the way that I read them. So I can't really trash this and say, no, this market is a complete joke, that there's nothing getting better. It's the same old story, because they did broaden it out. Now, the question we have to wonder about, though, is, in my opinion, is this broadening, was it really just related to making themselves look wonderful at the end of the first half of the year, where they got into things that didn't work, so they pushed them this week up, right, to make themselves look better, that, hey, at least this thing closed near recent highs, or the diamonds did this, or whatever the case may be. That's the thing that has me a little worried. That's why I'm saying on the slide that it's a little maybe sketchy. So you don't know for sure what's going on here. Or was it legitimate buying finally? I just don't know. So the other thing, and we're going to cover it in sector situation, but I wanted to mention this. Is this it? Let me see if that's my chart that I need. And of course it isn't. And so then this one must be it up here. And that is. I just wanted to show this. We'll talk about it in sector situation video. But look, this also, those comments that I just made just apply to here. Did they come after sectors that didn't run because they wanted to mark these things up, or do they really suddenly believe in them? Because we've been noting that energy, these are the key sectors in my mind, left behind. Financials were left behind until this week. left behind until the week that we just passed, right? That we just traded through. So to me, like they came after things, and you wonder, well, those are two key sectors. What really changed in there? I know there was geopolitical, I know different things, but I'm just saying what happened, right? That all of a sudden these things get the bid that they did. Real estate, which was worrisome, gets a bid, right? Transports, which, they really had trouble. Unfortunately, we had FDX and UPS, but what happened here, right? Is it really, did things really get better? Are they going to get better? Is that for real? Or was it just this late dash into these things to help drive them up? Like even industrials had a phenomenal week, and so did basic materials, which we've had good ideas pop in those as well lately. So I just wanted to mention that. Sector situation will be very brief probably this week, but I just wanted to cover that because look, that's a legit development if it's true. And I still have reservations because of when it happened, right? It happened at exactly the right time to make them look better when they needed to, when the mark out is happening for the first half of the year, for the second quarter. So hopefully it continues and we end up in a legit bull market and an economy that's growing nicely. I'm all about that. But at the same time, right, I'm still a little leery of what I just saw because I'm very cynical about the timing of it. So while I leave the chart up here, we will take a look at, let me see if there's anything else that I want to cover here this week. I think I'm going to let a lot of that stuff go. Remember, the reminder is the VIX. The VIX is the reminder that, look, this thing is still whacked, and you're getting down towards multi-year lows again. This is good because, right, this lets us, a lot of things are going to be trading pretty cheaply that are not expecting earnings anytime soon, but you are getting back to really levels you haven't seen in years, way back in here again. And I like this, and this will let you position yourself for, if you come into the Phoenix portfolio, you can position yourself smartly, I think, in a lot of different ways with owning volatility at other points later this year, maybe early next year. But remember, if this analog keeps working, next year is also a solid year for the market, which again, you'll get no complaints out of me if that's the case. But the VIX, just to acknowledge that it's still way down there. And yeah, they just repaired a lot of things. Like it was maybe a kind of a sketchy repair, but we have to give them their due. And again, breadth is improving and those sectors improved, right? So that's the reality of the situation. So let's make sure we covered everything. Talked about the most likely scenario, talked about the VIX. We said they need to broaden the rally. They did. The sectors spiked. We just don't know if it's legitimate. Sleeper scenario has its chance, right? So that scenario is spiders kind of maybe double top here after pulling a lot of people in. And then we start seeing some corrective action soon, and we see where it goes. Otherwise, the sleeper scenario gets put to bed. Because if you keep rallying, right, you're attacking other highs, then I'm pretty much have to say like that scenario had its chance and it came and went. But we'll see, right? It's still alive as a possibility, and I think really now is the time when this should start to happen, now or soon. But I would say the next 1 to 2 weeks, which again would be kind of strange given how well other things have worked that argue on the other side, but. Another thing that argues on the other side of that sleeper scenario with where time is ticking is that a strong first half, which we had, augurs well for the second half. So you ought to have a solid second half in most cases if you have a really good first half, which we did. So the window dressers love their jobs. We noted that pre-holiday EP runs. We know to pause or pullback, most likely scenario, but everyone knows that last week. That pretty much happened. The third year, I don't need to hit on that. We've talked about it plenty of times. I would go back to DEFCON 3 this week because you still need to be concerned with the RSI divergence and possible negative divergence there in diamonds and spiders and that kind of a thing. But remember, the way that they're trading, it's almost like they know what's coming up. So they know that it's almost to me like they know that they're going to, the lowered earnings bars are going to be jumped over. Everyone will celebrate. They'll put on their caps on TV like they've done in times past. And that might be when you take profits, though. That's what the third presidential year cycle says anyway. I still think a lot of this is premature. I don't know why you have to say, like, we're definitely in a new bull market or we're still in the bear. I think right. It's been a good trading market. Let's just take what we can get while it's there and not worry about that stuff. But that's the way people have been sort of, I think, conditioned to talk about it. So they do. I think that the more arms are being twisted, where more people just had to get involved because the run's been semi-relentless, right? Somewhat relentless. Let's see. Yeah, so I think they're extrapolating too much in. We know there's other years where 99, 2000, 87, where they've gotten ahead of themselves. There's all the AI hype. We've talked about that. I think that these second quarter results could mask the fact that things really aren't wonderful. Like I said, I think they'll think Wall Street's wonderful. I'm not so sure Main Street's wonderful. Don't need to talk about panic buying. We just something we want to keep there so that everyone knows how we got here. I would say most likely scenario this week is they try to run them in the back half of July. That would be my comment, right? But that RSI divergence and the sleeper scenario, this is when that should matter if it's going to. If it doesn't, right? If it doesn't matter this upcoming week, the week after, I think we put that to bed and just you then have to focus on what happens with earnings. Let's see, anything else? We talked about FOMC. We noted that they'll probably try to make the most out of the sweet spots twilight, which runs for another several weeks. This is the time for a sleeper scenario for gravity to start acting upon it. Otherwise, we're done with it. And then we're still at we're at DEFCON 3. We think it would take a news driver for this market to really get hit hard. Something needs to develop. Again, Fed speech, data of some kind, a geopolitical development, political development domestically. I don't know, something like that. But we know where the yield curve inversions are. We know that when you're at this point, you typically get a recession. That's been called off by the financial media and Wall Street for now. And so we have to respect the fact that maybe that it's pushed out further. And that's why things are trading the way they are and not worry about it. Just trade what's in front of us, make the most out of it. But I think right now, right, I think if you get through this week and maybe again next week at the most, I would say that's when the sweet spot window will begin. A week or two after that, the sweet spot window closes. And I think at that point, it's the trends of early EPS and what's being said and the reactions to that dominate right from here on out. So that's what I would start to think about is what's going to start happening that way. And I think the market will start looking that way. So remember, if they keep things if they back things off small and just hold them, that's a win for bulls after all the gains that we've seen this week. So you might have a week like that. You may have a week where not a lot of special stuff transpires and you're just doing the best you can. So hopefully, right, we'll be able to find some good good opportunities in certain stocks within that, even if that is relatively kind of like milder action from what we've seen. So on that note, I'm going to wrap up. I'm going to say thanks for tuning in. I do hope that something I share with you this week helps you out in this upcoming week or sometime in the future. And everybody stay nimble and prepared out there and enjoy a very safe and hopefully very sunny and active Independence Day holiday. Thanks again.